Hey, what's up, guys? All right, so today I wanted to just discuss secured credit cards versus regular credit cards, okay? Oftentimes I tell people that they need to build up their credit because they either don't have any credit at all, they have installment debt, and no revolving debt. Okay, so there's a big difference between installment versus revolving. Okay, installment is a car loan. It's a car loan. Okay, your car note's $500 a month. You pay that for 72 months or whatever you agree, but you pay the same thing every single month until it's paid off. Okay, that's installment. A personal loan, same thing. It is the same amount every single month. You pay it over and over and over. All right, so that doesn't really move the needle when you're trying to boost up your credit score. Now, I'm bringing this up because, again, I often tell people that in order to boost up credit, a good way of doing it is having some revolving debt, okay? i.e. a credit card. It is the easiest thing to get, and most people can go get a credit card at any point, for the most part, okay? Now, if the card that you go get is a secured credit card, okay? Secured credit cards are great to boost credit, but this is the thing about a secured credit card. It will work in reverse too. It can go against you if you don't use it, okay? The whole point of getting revolving debt and getting a secured credit card is to boost your score and have it actually report to the credit bureau, okay? Revolving debt, like a secured credit card, is going to report to the credit bureau just like a regular credit card. Okay, it's going to do the same thing. So I'm bringing this up because if you go get a secured credit card, and a lot of times it is the best and fastest way to boost up a credit score. Okay, installment debt is not going to move the needle. It's just not. So if you just got a bunch of installment debt, personal loans, auto loans, you have no revolving debt, your score is not going to move very much. Now, if you miss a payment on an installment loan, it will absolutely kill your credit score, but it's not going to boost it like revolving debt will do. So circling back to the secured credit card, if you go get a secured credit card and you use it and you max it out, okay, so you go put down for those of you who may not know what a secured credit card is, it's basically you're just giving your own money, okay? So you go give the company $1,000 of your own money, and then they give you a credit card for you to go use it. Just like a regular credit card, only it's your own money that you're using. The key to it is we're trying to boost credit. This is a great way to do it. But it reports just like any other credit card. So if you go put $1,000 down, you then turn around and go use that secured credit card, run up your balance to $900. Well, now you're killing your score again, okay? So we're not accomplishing what we want. We're trying to boost your credit. We're not trying to run up a bunch of credit and then subsequently lower your credit score. That's the opposite of what we want to do. So you got to be really careful about doing this. But when you go get the secure credit card, you put money down. You want to keep your balances at about 10% or less of what you actually have available. Okay. You'll hear different numbers. Some people will say 30% or less. So for example, if you got $1,000 limit, 30% of that is $300 or less. I've talked to a lot of credit experts. I think 10% is even better. Okay, so if you got $1,000 limit, $1,000 available, you want to keep that balance at $100 or less. Okay, and this is a balance that's being carried over from month to month. So I'm not telling you you can't go buy something for $300. Not saying that you can't, but you want to pay that balance down to $100 or less as quickly as you can, and then have that balance actually carry over. So for some people, they don't like to carry over a balance. I understand, but if you're trying to boost your score, you kind of need to carry over a balance, all right? You have to have something reporting to the bureau. Otherwise, you're not helping yourself. It's kind of just, you're using the card, you're paying it off. You're using the card, you're paying off. But I think it's counterintuitive because some people think it's a good thing. Listen, I hate to tell people to have to go get debt, but it is what it is. There are some rules when it comes to credit bureaus and how they work, and they have rules. They have certain algorithms, and we just have to play within those algorithms. Okay, so whether you like it or not doesn't matter. Doesn't matter. It is what it is. They have algorithms that they use, and there's a certain way that you want to have your credit, and you want to have a mix of credit, right? So again, having just 2, 3, 4 installment loans, it's not moving the needle. It's not moving the needle. Okay, you need to have some revolving debt in there. So I wanted to shoot this video because I've had a few clients over the last couple weeks where I'm having to advise them on getting a secure credit card. There's nothing wrong with a secure credit card. Use it as a tool. Okay, it's not just something to go out and use just for the hell of it because you need to go. You go into the club, you go in a restaurant. Use it responsibly. Like, use it as a tool. It's a tool. Is all this is. It's just a tool to play in the game and play within the rules of credit bureaus and how they operate and how they calculate all of our credit scores. It's all similar. Okay, I don't care who you are. The bureaus, there's only 3 of them, and there's a little nuances between the 3, but for the most part, these are the rules that we have to play in. So if you need to get a secured credit card to boost up your score, just know when you get that card, although it's your money, they're still going to report it just like it's a regular credit card. So don't go run it up and then kill your credit score because now you've maxed out a secured credit card. And I have seen it, okay? It's like one of the worst things you can do is go get a secured credit card with the intent of boosting up your score. You then go run it up and leave it close to the max. And now you're actually making it worse. So you just got to be responsible when you use it. Use it as a tool. It's a resource, all right? If you guys have questions about this, please hit me up. Also, you can go to TexasMortgageBoss.com. You can reach me there. Shoot me a DM here on IG. But this is so important. This credit stuff, I'm just going to continue hammering it because it's so important. Whether you're looking to own a home, get an apartment, get a car, I don't care what it is. Get a job, all right? It's that important. I just want people to be more aware and pay attention to their credit because a lot of people are they're on cruise control, all right? And then they want to own a home. Usually it's when they want to own a home is when stuff comes up, all right? Typically, whether your credit's good or not, you can go buy a car. You know, they'll charge you an arm and a leg for the interest rate, but you could probably go buy it. But the home, that's normally when you see a lot of stuff. So again, if you guys have questions about this, hit me up. I'm going to continue to put out videos about this credit and make sure people are using their credit wisely and using it as a tool. So hit me up. You guys have a great day. Talk to you later.